Morning, Steve here in Chicago with the morning grain comments. Well, I hope everybody had a long, nice holiday weekend. On Friday, everybody was kind of rolling the dice to see how equities and energy markets would react over the weekend. Everything's up. There was 4 OPEC nations that agreed to freeze production at January levels. The problem is that we're still producing too much oil for the demand, so freezing it at January levels really doesn't fix the problem, but it did encourage some short covering. Also, China stepped in and stimulated their economy. There's less concern about EU banks. The problem is that China trade debt in January was negative, and right now the China commercial bank bad loans is at 10-year highs in the month of December. So we're not really fixing some of the problems, but we did see some short covering and some buying in the markets after this weekend. Grains are a little bit higher. I think they're following the energy markets and some of the issues that are helping the financial markets. Still not a lot of bulls in the grains because of the South American harvest and some of the issues that we've got too much supply and not enough, especially export demand for U.S. grains. Other than that, we did see that Brazil forecast looks favorable for harvest down there. It's been warm in Argentina, but they also have had some rains. The Brazilian harvest is expected to be about 16% down in the beans, and 14 is what it was last year. We get to January NOPA crush today. The average guess is around 154 million bushels. Last year was 163, so some of the drop in the crush margins may have slowed the crush. Also, there's a little bit of question about overall domestic and export soybean meal demand. May beans overnight is back over the 100-day moving average. 890 is your initial resistance. Could see some farmers selling there. The May resistance in corn between 370 and 371 where all the 20 and 50-day moving averages kick in. And resistance in wheat starts at 480 on the May, but more importantly at $5. We saw the funds last week were huge sellers of beans, meal, corn, and Chicago wheat, much more than expected. Makes the market vulnerable for some swings. Commercials reduced their net shorts and actually long a little bit of wheat right now, and the index funds were small buyers of beans, meal, corn, and wheat. So we'll see if we can push through some of this resistance. I think most of the grain traders think the market number-wise is still bearish, so we look for a more choppy trade. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.